Turning our attention over to the grain markets now, we were joined on Wednesday afternoon by Heartland Farm Partners President Jeff Peterson to discuss some of the trends and factors influencing the commodity trade. You've been a traveler lately. How are things looking in terms of yield across the territories you've traveled? I believe you're up in North Dakota a week or two ago.
Yeah, was up there for the Big Iron farm show that they had up there, and a great turnout. It was fun to get a chance to get up there. Starting off up in North Dakota, it's interesting. They started off really wet early, and unfortunately here towards the end they've turned off dry, and so they just aren't quite getting the finish that they like. And then as you move a little further down into South Dakota, that southeast corner, just as Pro Farmer talked about, it's definitely dry, yields are going to be off. But as you move your way north up into South Dakota, at that point the crops look like they're going to be a little better, but it's so variable, just like we're seeing here in Nebraska. Some guys are saying they're going to be off 35–40% on their yield compared to last year. Other guys that they'd say they're going to be about steady. So it's really interesting to talk to people right now, Bryce.
Well, with that in mind, Jeff, let's talk about nationally, as we like to do as we look at corn and soybean crops. What do you think happens with yield as we assess those post-harvest?
I really appreciated getting NASS out in the field and having their numbers available for the WASDE report. It's a little bigger sampling than what Pro Farmer had. It was good to see Pro Farmer's numbers, but as we dig into that, so as we started looking at their basically their number of ears and coming up with those implied ear weights, we think they're pretty close on the corn number. It could maybe come down about a half a bushel yet. Now, if we get in there and ultimately we see that for some reason the kernel depth isn't quite there, it's a chance it could come down 2 bushels yet, but it's getting close. As we dig over to the bean number, though, that's the one that it surprised us. They came out with that 50.5. We didn't think in this report there'd be enough information, but what it tells us is, as we dug in to look at those pod counts, 1604 on the pod count would be the smallest amount of pods that NASS was reported going back to 2019. And when we put that 50.5 yield on that brings us up to a pod weight that would be a new record for September, and if it holds would be a new record overall. And I don't know about you, Bryce, but I just don't think we've had the weather to give us those type of pod weights. We got surprised back in 2012 because in 2012, late in the season, there was some rains came in mainly because of a hurricane that came into the Gulf that gave the eastern corn belt some rains and even over into Iowa some rain. And as a result of that did give us some higher pod weights than normal, but I don't think it's this type of year. So we're looking for the soybean yield to also come down. Too early to say how much, but I think it'll come down from where it's at yet, Bryce.
Knowing that, Jeff, let me ask you this. End of September historically is not always the best time to sell your commodities. That's not the market's high year as we look at the previous data. With that in mind, where do you think we're going with prices for corn and soybeans?
Yeah, so you're exactly right. Normally this time of year, we're on a process of going lower into harvest, but there's so much uncertainty out there on the supply side yet, not only within the U.S., but also across, over into Ukraine and looking at what type of start Brazil's getting off to. Overall, we think that once we can kind of maybe get away from a little bit of the hedge pressure that could happen because of harvest, we think we've got some higher prices on the future side down the road on both the corn and the bean side. Now, what that's going to take, though, okay, this is no layup. On the bean side, stocks and ending use, it's tight, and if the bean tightens up, then it probably has a little bit easier time. But what we have to remember is that Brazil, they're planning. And if they end up having a big crop, ultimately then that could be a little bit short-lived, and on a rally we'll have to take advantage of that. Over on the corn side, though, in order for us to support the numbers we're at and ultimately a little bit higher prices, which we think is possible, we are going to have to see that yield come down slightly.
Jeff, let me give you this scenario. Harvest is underway across the Cornhusker State, as we mentioned here on the broadcast a couple of times. Bins are full for a producer. They still have corn or soybeans out in the field. What should they do with those that are unsold?
Yeah, that's a great question, and one this time of year everybody needs to kind of think about. So we start to answer that question by saying, okay, where are you sold? What percent sold are you? We'd like to be right now about 70% sold of insured bushels. That's what we've worked our way up to. Still got quite a few bushels to sell, but if you haven't sold anything yet, you should take advantage of this rally in here and make some sales. But if you're, somewhere around that 70% of insured, which would be about half of production, you can probably just go ahead and hold off at this point. Those bushels that do go into town, we would say, I would put those on delayed pricing. That's going to be a little bit cheaper than what we have on the storage side. The reason we're going the delayed pricing route there is that we still think there'll be some opportunities to see a better basis number down the road. So what you can do is you can go delayed pricing. We see some basis improvement happen after we get past harvest. At some point in there, you can convert that over to a basis contract, which would stop your delayed pricing charges, also allow you then to pick up in a cash advance on those bushels, still gives you the ability to get a better futures price. And then at that point down the road, then when we think the futures is kind of topped out, we can then go ahead and price out that basis contract.
Let me pull something you just said there. You said you expect basis to get stronger. People say basis is strong right now. You're predicting it to be even stronger here in the months ahead?
Yeah, that's a good pickup. I'm glad you asked that question because what we have to kind of break it down. So let's make it so that we make sure we're clear. So the basis levels that you have for what I'll call these quick ship bushels, the stuff that's going to go the next day or the next week, are really good numbers. And you need to take advantage of those if you've got some bushels. Maybe you sold some stuff and you're on a hedge to arrive. You can take advantage of that basis level, get that locked up. But for the stuff that I call that gut slot, that stuff's going to come in right during harvest, we still think we could see just a little bit better basis level there yet. We want to wait and see and make sure these rains don't end up materializing and being more than what we think. Slow harvest up, wait just a little bit on that harvest basis, but you will want to get that locked in for bushels that physically have to go to town that are on a hedge to arrive. But basically then after harvest, yeah, we do think we'll see some basis improvement happen, Bryce.
Final word is typically yours. I ask for advice. You've been doling out all sorts of advice though here, Jeff, so I'll just leave you with your final word. What would you like to leave us with this week?
The biggest thing right now is get out in the fields, get an idea where your yields are at, understand what you're going to have to physically move for bushels, take some time to go ahead and understand what your cash flow is, and be ready to make some sales on a rally in the market.